He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Angry Mortgage Podcast Special Edition. Special Edition. I'm very fortunate today to be with a great friend of mine and a great mortgage broker, a great media guy too, Vince Gaetano of Owl Mortgage. Owl Financial? Owl Mortgage?
Owl Mortgage,
Owl Mortgage. That's it. That's the right. By the way, that's the right friggin' name. If you're in the mortgage business, call yourself Mortgage, okay? Like it's Butler Mortgage, it's Owl Mortgage. All these guys are a financial capital, like, you know, please, Jesus, it's the mortgage business, okay? So I like that. Now, Vince, I think many people will know, Vince, you were at a previous brokerage where you were the face of the brokerage, Monster Mortgage, yep. Right? And Vince was so well known in in Ontario, particularly in Toronto GTA area, for his CP24 show, Hot Property.
Correct.
Hot Property. And Vince, how many years, Vince?
19 years.
Come off it. 19 friggin' years? Really?
That is quite the introduction. So thank you. 19 years.
19 years.
Yeah. Yeah.
Son of a bitch. That's long.
My kids only know me as the dad from TV.
That's from TV.
It. Yeah.
Jesus. I didn't know. I mean, I watched a lot of episodes, saw it a lot of times. And but yeah, that was a great show, and you were the best contributor.
Thank you.
CP24 Hot Property, people remember that. Now, the most important question that I have to start with today, the question that people all over the GTA want to know: Al Sinclair, does he dye his hair black or it's just shoe polish? Like, what's the right answer there? Need to know.
I don't know, because we're never that close to each other to really nail it down, but. You know, Al's a good guy. Al's, I call him.
But my bet's on shoe polish. Okay.
No, I think he might be dyeing it. I think he's dyeing it.
Possibly.
Possibly.
Yeah. Like he doesn't have a white hair in his head. I'll tell you, how old is Al's in his 60s, right?
He is.
Yes. Not a white hair. Not even his temple is black as pitch.
I always thought Al wanted to be the Don Cherry of real estate.
Well, he may have succeeded.
Yeah, he may have succeeded. He's done a pretty good job promoting himself. I think he runs a good shop, and hey, it's always buy.
So yeah, there's only a good time to buy, and it's now. It's right fucking now.
Exactly.
Okay, yeah, it's right now. Okay, so I'm convinced it's shoe polish. Anyway, here's a quick story you might find interesting. In the People's Republic of China, the leadership of the People's Republic of China are all men, obviously. And if you think about the guy who runs it, Xi, okay, up until very recently, and he's in his 70s, I think he's 70 or something. And up until very recently, his hair too, and all the Politburo, all the top bosses, they're all guys in their 70s and 80s, and their hair is as black as imaginable. Like as black as night. Okay,
trying to figure out where we're going with this.
And so what happened is there is a little subversion in the People's Republic of China still. There are people who still call them out, you know, quietly, secretly, but it filters out. And the one thing they hit them hard on was, do you believe these bastards are really all black hair? I mean, like, so guess what? When you see him now on televisions, he just has a couple of streaks of gray.
Little streaks,
okay?
a skunk streak.
He's not skunky. He's not skunky. You know, he's probably got about $30 billion squirreled away somewhere, so he can afford a good hairstylist. But like, he's got a couple little bits of gray now, okay? And that was in reaction. Oh, and if you really want to get Xi going, the guy, I'm obviously he's not listening to this podcast, so I don't give a shit.
He might
okay?
be.
I don't think so. Okay, but if you really want to get him going, you call him Uncle Panda.
Uncle Panda.
It's a phrase in Chinese that he doesn't like, and you know so. But yeah, you know, in the face of this constant laughing behind his back from young people and people who are subversive, which is really hard to be subversive in China, right? Like they keep an eye on you, okay, and they control all kinds of all the social media, everything digital. They control it. The party controls it. But he got under his skin this. Why do these guys only have black hair? Like all of them. Like sometimes they'll have a party congress and there's a whole long line of these guys at this dais and every one of them in their 70s and 80s and every one of them black hair. So anyway, that's no, maybe Al Sinclair has just got some miraculous genetic qualities and his hair really is naturally black. Okay.
He's a good guy.
He's a good
regardless
guy.
of what he does with his hair. He's a good guy.
But I had to ask. I've been planning on asking Vince that question since I invited him on the show. I've been planning on Vince asking that question.
I didn't think we'd start the show talking about China.
I knew we were going to start with Al Sinclair, though. I knew we were going to start with Al Sinclair. We had to start with Al Sinclair.
It was a good run. 19 years was a long time.
And listen, folks out in the podcast world, Vince did a really good job. Vince gave good advice, answered questions intelligently. Now, Vince, since other people from Monster Mortgage are filling in, and I won't cast any aspersions on them at all, except to say I liked the way Vince answered the questions the best. Okay, honest, intelligent, like to the point. And I would say, particularly in the last 5 years, Vince, I don't think you were a raw guy for the industry. Okay, I think you just in the last 5 years you just told the truth the way you saw it, how things were going. So anyway, thanks very much for coming. Really appreciate it.
I've been looking forward to this. This is a lot of fun. I compliment you on what you've done.
Thanks.
This is a great intro to the whole social media world. Good for you. I'm really happy for you.
Yeah, you can imagine. I'll tell you another thing about Vince. Vince has a son who is a social media genius. Right. 4.5 million followers on TikTok. Like his son, Mark, makes a significant, this broadcast does not get to CRA, but I know this guy makes a significant amount of money.
He files.
From social media. He files. But I think he makes a significant amount of money from social media. He's very good at it. And, but Vince, at least you had somebody as a guide.
Well, okay. I'll tell you a funny story, and some people have heard this already, but Mark sat me down and says, "Dad, you got to stop doing TV." And I'm like, "Mark, I've been doing TV for 19 years.
19 years.
Like, why would I stop doing TV?" He said, "Dad, nobody my age knows what a cable bill is."
True. All true.
You got to do social media. I said, "I have no idea what to do." So he gets me a ring light and says, "Just do what you do on TV, but do it yourself on social media."
On your phone. Yeah.
On your phone. I said, "Well, okay, Mark, why would people your age want to listen to me? Like, I'm an old guy with white hair." Like, he goes, "Well, Dad."
So obviously no shoe polish.
No shoe
with
polish.
Vince. No,
I made a deal with the big guy upstairs saying, if you could give me my mother's hairline, I will never dye my hair, because my dad looks like Mr. Burns from The Simpsons.
He's like Mr. Clean, right? I got it. Okay.
So I said, "Why would anybody want to listen to me?" He goes, "Well, Dad, think of it this way. Think of the movie Back to the Future."
Yeah.
Okay. You know stuff that people our age don't know. You have experiences that people our age don't have. So just be honest, be authentic, and help us buy a home.
Yeah. Perfect.
And don't talk to us like my dad. Lose the suit, and just be honest.
Okay. And it's worked, obviously.
And, I thought about it for a minute, and I'm thinking, wow, that's kind of interesting. And the one thing he said was, and don't talk about mortgages.
Sure.
Nobody gives a shit about a mortgage. Everybody wants to buy a house.
Nobody gives a shit about a mortgage.
Teach them how to buy a house, and the mortgage will be the byproduct. So I've stuck with that. And it wasn't until after being out of TV do you realize how controlling TV is.
Oh, hell yeah. Absolutely.
Okay? You got commercial packs. You got so many minutes to talk. They want to share.
You can never say fuck.
You can never say fuck.
Yeah.
You can never swear. You kind of have to, toe the party line and be respectful. And you never have a follow-up question, right? Because when people ask a question, you really can't ask for more information. So you always got to, you have to generalize in the short period of time you have to answer a question. And being on social media, all of a sudden, you have unlimited time, you have direct questions, you have engagement, never seen before, and it's a lot more fun. And I could say whatever the hell I want to whomever I want, whenever I want, and it's just been a lot more fun.
And imagine me having no such guide. Like, I'm 66, and I only really started amping this up a year ago. I've been on Twitter for about 4 or 5 years. That was just accidental too. The only reason I ever got on Twitter is I just wanted to argue with people. That's the only reason. It just grew. But
Ron,
there.
When you are on TV and you make your appearances,
yeah,
I have to chuckle because it's not you.
Oh no! I mean,
you're trying to be discreet.
I have to be. I can't swear, and I can't. I can't do lots of things I can't do on TV. You're right, but that's okay because there is lots and lots of content of me being Ron. Okay,
yes,
just like a ton. All right,
and I love it.
So
don't change.
But when I got into this thing, like I had, I have people who help me, sure. And I have, and my son's 40, so he's a lot older than your kids. Yeah. Okay. And I just sort of wing it. That's it. I didn't have any Sherpa guide, and I know we struggle along, but the truth is it's important and it's the future. And yeah, I think there probably won't be any TV show like CP24 someday. Not tomorrow, not next year, and not 10 years from now, but someday.
You're absolutely right. And one thing I will say is ever since I've been doing this, and I'm up to 130, 135 shows now, I feel a lot younger because it's invigorating to get on a mic, do your thing. People want to hear it. People are encouraging you for more. And you take it a little bit more seriously to come up with some pretty good content because you have to be on all the time. So the amount of effort it takes, as you know, is mind-boggling.
Well, but it's not that much effort for me because I got a bunch of people running around helping me all the time. Like Vince noticed. Like, I mean, it is
like, what the fuck's going on here?
We say, okay, let's get started. He says, okay, Ron, what do you got to do? I got to do nothing. And then like a bunch of people came in. I sit down. A bunch of people come in, get everything rolling.
I got it all wrong.
And then when we're finished, I'm just going to stand up and walk away, and it's going to take care of itself.
Impressive. Okay? Very impressive.
It's not that impressive. So let's talk about the mortgage business and let's talk about real estate. The thing where you are somewhat different than the way we work is that you're someone who is, and when I say we, I'm talking about my side of Butler Mortgage, or the part of Butler Mortgage that is basically just sort of client facing with highly discounted rates from banks and things along that nature, mortgage rates from banks. You're also got one foot in the real estate world, so that's a really interesting thing to me, because it gives you a lot of perspective. It gives you a well-rounded idea of what's going on. So what's going on in the GTA real estate world right now? I know you're more of a 416 guy, but what's going on in the real estate world?
Well, GTA is really interesting because I break it down to two segments. You got the 905 that wraps around the city, and you got 416. The 416 area, I think, is very dynamic in the sense that you're seeing a lot of transition of properties being repurposed down in the core, especially near transit hubs. And, we are in dire need of rental units. The developers, for the most part, don't want any part of it. I don't think it's cost effective to build. And with all the red tape, it just takes too long a process. And, we talked a little bit about all the taxes associated. I saw one of your posts recently, 31% of the cost to build a house is taxes.
If you're a developer, if you're breaking brand new ground and you're building a condo tower or you're going into a new subdivision, 31% of the price of the house goes to some level of government in some way.
Which is crazy, right?
Totally fucking crazy. Okay.
The only way you could really get a lift is transitioning an existing property under the new legislation into multi-units,
By the way, new legislation for folks outside of the GTA, but also for the folks in Vancouver who have the same approach now, and all of British Columbia. It's my understanding that Dave Eby, the Premier in British Columbia, has moved to upzone. What upzone means is every single lot in the city of Vancouver and other cities in BC, and the same is true here in Toronto, every single lot, if it's single family, you don't have to ask change it to multiple zoning. It is instantly multiple zone.
Correct. And
up to fourplex, right?
Up to fourplex,
Yeah.
and you could put the fifth unit in the form of a laneway suite or a garden suite. So it could be up to 5.
Up to 5
right?
units on one previously single family.
So as long as you have all your permits, you follow the guidelines, and everything's within the bylaw, you're good. And if you're near a transit hub, and that's 500 meters from a transit hub, you get fast-tracked.
You get priority.
You get priority.
But is it still a shit ton of red tape?
If you know what you're doing, it can move along quite quickly.
Okay.
We have a number of projects on the go right now on Lansdowne, south of Bloor, steps from the Lansdowne subway station. We turned single-family semis into 4 units.
So what's the frontage on that? 30 feet?
25.
25 feet? You're turning 25-foot lot into 4 units.
Yeah.
Vince, don't take this the wrong way, but are some of those units pretty small?
Well, this is what's interesting. Everybody I've taken through these units can't believe it.
Yeah.
We all know how big a condo is.
Yes.
Okay. Condo's 500-600 square feet. So let's
No. The new condos are 485.
I had one 329.
Okay, that's
last
a dog
week.
crate in the sky. That's what it is.
It's like cat crate.
Cat crate. Well, actually, in some states, in some progressive states in the United States, that is smaller than what they allow for a cell for 2 people.
There you go.
There you go.
So in this project on Lansdowne, the smallest unit is 875 square feet. They're all 2-bedroom. The laneway suites are 1,300 and 1,200 square feet.
So they're big.
They're huge. They're 3 bedrooms.
Yeah.
Heated flooring, 2.5 baths.
Wow.
Huge.
Perfect.
And high ceilings. We got lofts in there as well. And, the end product is a great unit. They're brand new, all meet code.
800 square feet for the 1-bedrooms are 800 square feet?
Those are the basements. Those are 2-bedroom.
2-bedroom. 800 square feet.
The smallest unit's a 2-bedroom.
Pete, let's face facts, Vince. You and I know that there is a ton of people in this country were brought up in a 1,000 square foot bungalow.
Yes. Raising 4 or 5 kids.
Yeah, that's right.
So I think there's an opportunity there. And what we've done is we've focused on that area. A lot of our clients want to build wealth. And we're saying, listen, you're inheriting property from your parents or whatever the case is. Why don't you convert it? Let's take a look. Let's see what opportunities exist. We have the MIC as well as part of my product suite.
Mix of Mortgage Investment Corp, folks.
That's correct. So we're focusing on repurposing, improved properties, a lot of construction loans. We have construction crews available to us that help us through that process. And they're very good at it.
By the way, as much as I will be critical of the whole housing crisis that we have in British Columbia and Ontario, and that disease may be spreading to Calgary, but let's just, it's obviously a big problem for people who want to rent in the city of Toronto, in outskirts. And, rental may be a problem through the entire Fraser Valley in British Columbia, through certainly city of Vancouver and all surrounding area, because Vancouver is actually a very tiny place population-wise. It's only about 480,000 people. But the surrounding area, New West, Burnaby, it goes on and on, Fraser Valley, West Van, North Van, that's where the people are. And the rental rates are through the roof. They're through the roof in tons of places in Southwest Ontario. We know of Niagara is a comparatively small town, and there's people paying $2,400 for a 2-bedroom. It's Niagara is small. That's a small place.
It's very small.
Traditionally low income and low cost place too. Okay. So all kinds of trouble throughout Southwestern Ontario. It's just not the GTA because that's trouble. $2,400, $2,200, $2,400 for a 2-bedroom is trouble for anybody because that's it's a cold country. You got a place to sleep. It's warm.
Hey, we don't live on a beach, right?
So I'm supportive of people who are doing this kind of multi-unit stuff. I can be very critical of the government, very critical of some developers, for running up prices. But converting, taking one 25-foot lot and turning it into 5 units is a benefit, no matter how you slice it, particularly close to transit hubs.
I think the key there is you got to know what you're doing. You really got to be prepared to underpin, which is a big ordeal. You want to if you want to maximize return on those basement suites, you got to have 8-foot clearance.
Yep.
So underpinning
Yep.
is
don't make a shitty basement.
Yeah, don't
suite.
make a shitty. Like at the end of the day, you could make it look nice, but if it's got 5.5-foot clearance, it's garbage.
Terrible. Yeah.
So, do it right. And if you do it right and you meet code and you follow what needs to be followed, you're going to have a very desirable property.
Look, if people want to live there and the rents work, and here's the benefit of converting stuff right in 416, in old 416. If you convert stuff in old 416, those people tend to make a little bit more money than people in other places. Okay, like they're digital, they're finance.
They don't need parking.
And they don't need parking. You just it's that simple. They just don't need parking. So there's some benefits there for sure.
Yeah, so we're really enjoying that aspect of it. And I think this is the route we're going to go, is try to help folks take advantage of these opportunities.
Okay, but you also get to, because you're also in the private lending business, as are we at Butler Mortgage, but not to the extent that you are. You also tell me stories about great difficulties people get into. So let's explore that a little bit, because there is this terrible calamity of people who fall into trouble, who own a home, fall into problems, because there's lots of ways to fall into problems these days when inflation was running at 10% not too long ago. Tell us about some of the things you run into where people get into trouble and how it happens.
Well, the key to any good private lending is knowing how you're going to get out of the deal.
Yeah, because you got to get out, because it's expensive. It's
right?
expensive.
So,
it's high interest. Expensive.
We're always trying to figure out, is this client able to be rehabilitated?
Right.
Okay. And a lot of people that got into private lending always believe that 1 year is a long time.
It's the limit. Yeah.
It's not a long time. Yeah. You put the file in the cabinet, renewals come up quite quickly, and you see that file again. Yeah. And I think what people are experiencing right now is
By the way, do we need to explain cabinet to the younger folks? I mean,
cabinet. It's usually a black box that has drawers, and you put real files.
Nobody under 30 knows what the fuck that is. Let's call it a folder. We'll call it a folder. We put it into the folder. Okay.
It's a hard folder. It's not a cloud.
We're losing them, Vince. We're losing them. That's it. But go ahead.
We have situations where people can't get out, right? So the discussions that come about are, listen, how are we going to end this relationship? Because
you're talking about people you've provided a private mortgage for them with the intention that it's a temporary thing to get them through a problem.
And, some folks, they have a game plan to buy another property. They're going to flip it. They're going to do a lot of that stuff. And it doesn't work out, especially over the last couple of years. So, we're having long discussions with them about how to get out. In some cases, it's a sale. In other cases, people are helping them out. But they're tough decisions. And more people are facing this. The liquidity in the private space has shriveled up.
Not everywhere.
Not everywhere. Yeah. But for the most part, the payouts that we were experiencing 3-4 years ago are not happening at the pace they were.
So for the folks out there to understand this, what it means is that we go back 3 or 4 years when the real estate market was super buoyant and rates were low. You get a mortgage in 2021, get a fixed rate mortgage for 5 years for 199, 189, and people were flocking to that. If they had a temporary problem, they could find a way out. They could find a good solution. By the way, we'll get into it more in a minute, but there's alternative lenders which were easier. Institutional lenders, trusts and banks, where it was easier to get into those, but at a much lower rate, like 299,
399,
and in 2021, 299, 349, whatever, it's functional. Like everybody would say that I want that now. If you said that, we got a 1 year wait for 349, I'll take it. Okay, but that was what was available back then, and people could transition out of private mortgages much easier, and now that's becoming a lot harder.
So to put things into perspective, go back 5 years ago. A portfolio would probably turn over 75 to 80% a year.
In 1 year, you're paid out 75% of the time.
Yes. Yeah. And the rest of them are probably 2 year max.
Sure.
Okay. Today it's the opposite. You're getting paid out maybe 20% of the time.
So you're carrying 80% for however
exactly.
long.
So the intent was to refinance, but these folks are now going to their original broker, and saying, "Hey, I want to refinance out of this private." And it's like, well, rates are higher. Stress tests are more difficult. You don't qualify. You're going to have to renew again. You can't get out. So you're stuck. And that's where the liquidity issue starts coming up in some cases. You're not as buoyant as you were 3-4 years ago. Sure. And you know, we're a smaller fund. We're not that big. So, you know, it becomes a challenge.
Now, this brings us to a topic that is something that's, you know, near and dear to my heart, and because I'm very old, okay? And by the way, sometimes people get pissed off about that, and they say, I've even had other mortgage brokers say, yeah, you got to quit saying you're old, Ron. I mean, you know, that's kind of a self-deprecating thing that I don't know whether it's really appropriate, it's sort of ageism. My position on that is they can fuck themselves, okay? I'm going to tell you this. When you are 66 years old and weigh 320 some odd pounds, you feel pretty fucking old at certain points in the day. Okay,
things hurt when you move.
There's that. Okay, so I mean, like, I'm gonna keep calling myself old, and for everybody who thinks that I shouldn't, you know what to do.
Hey, I've been in this business 30 years.
30 years. I'm 29. You're 30. So something that's close to our hearts is, both of our hearts, is that we worry about a certain lack of skills in our business, and a certain something that really has just become a big thing in the last 6 or 7 years, which is the growth of the pure private lending shop. Okay, because when you and I started in the business all those years ago, you could access private mortgages, but you could only access them by knowing someone.
Correct.
Knowing the people who were doing it. They might be lawyers, they might be particular individuals, there was probably 1/10 of these things called MICs, which is mortgage investment corporations, which is pooled funds of individuals and companies to go into private mortgages. But there were damn few of those. There
weren't many.
There weren't many. And now there's tons, like so many. And if you go back to when we started, you know, you could arrange a private mortgage. Yes, you could. It was just as you stated. It was the last resort. Okay. Nothing else can be done. Only this. Okay. Combination of credit, income, maybe it's construction, something. But no matter what, it was the dead last resort. And we struggled always to find as many possible avenues.
I would even say, Ron, that I would consider a private transaction a bridge or a Band-Aid.
Yeah.
It's a temporary tool, right? It's a bridge to get you where you need to be. It's a Band-Aid to solve a problem that you're going to get out of.
But something that sort of burns Vince and my asses in the last 5 to 10 years is there's shops that have opened to do private mortgages, advertising their services to the public directly. Okay, it's to say, hey, we can solve your problem. We can do this. We can do that. We don't care about income. We don't worry about it.
Just got to fog a mirror. Just got to fog a mirror.
But do you remember there was, I don't know if they do the same ads anymore, but there was one company that was on the radio all the time that just used to say, if you own a home, approved. You own a home, you're approved. Okay, like, holy shit. I mean, that is kind of demented advertising to say that everybody can access equity in their homes, which wasn't true, obviously. And also because everybody, if you bought a house with 5% down, you don't have any equity in your house. Okay, like, that's reality. So you can't access that 5%. So that instant approved was not true. But more to the point, it's all this constant suggestion to the public that this is an easy, rational, commonplace occurrence, that you should get a private second mortgage, you should get a private mortgage on your home, get your hands on some cash. It's perfectly normal. It's perfectly good. It's perfectly right. To which I reply, bullshit. Okay. It's a problem waiting to happen when you should not be accessing private lending willy-nilly. And this is another thing that pisses both of us off about our business today, because there's so much of this available, because it's so publicized, because there's whole shops set up just to do it, that the stuff we used to do, and we still do, by the way, both of us still do, both of our companies still do, is to try to figure out every way to avoid the private mortgage.
Correct.
Okay? Every possible way not to. Is it possible for you to get into a bank? Is there possible for you to get a cosigner so we can get you to a bank, perfectly normal interest rates? Is it possible that we could pay off this stuff over here or move that over there, or you could find some way to, somebody could pay this debt off for you, we can fit you into the bank? I mean, can you get some help from others? Is there any way? No. Okay, so we've exhausted every possibility of getting you to a bank mortgage. All right. What about the B lenders? So there's lenders in our space that are institutional, home trust, community trust, Equitable Bank's a great example, number of others who are institutional. That is to say, they are licensed through the federal government. They are a bank and trust, a bank.
Yep.
In any other, they're a regulated institution. They have to do things in a certain way, and they will typically always offer renewals. They have a number of safety features built in, and you're dealing with a bank. You're dealing with a trust company. Okay. And we would do everything in our power, you and I, and the people who work for us, to find, if you can't fit into that bank, we're going to try to fit you into that institutional alternative lender. We're going to do everything in our power to find an answer for you. And if we exhaust every possibility,
you go to private.
Go to private, but only as a last resort. Now, you were telling me today, before we started the show, that you see people who could easily have gone to these other type of alternatives.
Well, being a mortgage investment corp, we deal with other brokers.
Yep.
Okay. And they come to us looking for help. And 6 to 7 out of 10 times, that deal is an alternative lender deal.
So you're saying that the consumer who feels they absolutely need to have that additional funds,
yeah,
when they go to a broker who just immediately takes them to a private lender, like there's no other, that either the broker can't be bothered,
and I'm probably going to shoot myself in the foot saying this, but they're lazy brokers. They're not doing their client a service.
Okay. So I don't think you shot yourself in the foot.
No, but the reality is these applications come in and they're bankable to an alternative lender that's regulated. You're going to get a reasonable rate, but you got to provide paperwork. Mm-hmm. And these clients do have paperwork. They're just not being asked.
That's the important thing, right? Isn't that the important thing?
And I think the path of least resistance is what's being driven in this case. Like, these brokers just don't want to do the work.
They want an easy solution that's guaranteed, and they can sell their client, yep, I'll get that money for you. Here's the rate. Here's the fees. Here's what you're going to have to pay, and we'll get that for you, and that's your solution. And by the way, there's nothing else to be done.
And it drives me nuts.
Because they're telling them something wrong. There are other things that could be done,
exactly.
Right? But I don't even necessarily slice that off as lazy. I slice that off as it's not so much lazy. It's, I know that I could get this done, and I can't be bothered to try the other stuff. Now, that's not really lazy, because, there's always a certain amount of footwork you have to go through to get every mortgage funded, right?
Yeah.
I mean, you have to do some stuff to get it done. And what it is that these brokers who are coming to Vince or coming to everybody else who offers private funds for a mortgage, it's just fast. It's fast. It's efficient to them.
But you know what drives me crazy?
Yeah.
Is when they say, well, can you add my broker fee into your lender fee?
So what that really means, I got to explain that to the consumers who are listening. That's them hiding their pay, essentially.
Yeah.
Okay.
And it's like, no, charge the broker fee.
Yeah. So, so just to give a quick thumbnail sketch of that, if you're getting if you want a mortgage for $100,000, second mortgage, you got a first mortgage with a bank, you want to get your hands on $100,000, the broker says, okay, I can get you the 100. Their interest is high. It might be 8.75, 9.5, which is high. There's fees. The lender wants a fee on top of his interest of 9.5. Yep. He also wants 2.25% of a fee for the 1 year. And then you're going to have to pay that lender's lawyer. You're actually going to have to pay the lender's lawyer to do the work to get the mortgage put together. You're going to have to pay your own lawyer, who's got to review that with you.
Pay for the appraisal.
Pay for everything. And on top of that, what Vince is saying is the mortgage broker who is initiating this whole process comes to Vince and says, oh, pretend your fee that you normally charge is like 2% or 2.25%.
Exactly.
Pretend it's 4.5%, and then you give me 2.25%.
And then they charge a broker fee as well.
That's crazy. They can't do that. That's nuts. That's insane.
So,
oh my God.
I'm like, guys, listen, here's the deal with my Mick. Okay. I'm fully open. If you want
what that means is if you, at the end of each month where your payment's due, if you want to pay off the mortgage, no penalty.
No penalty. I want it fully open. I want that client to know that all the fees are up front and there's nothing going to be lingering on the back end.
Right.
I want that broker to have control to take me out at any time.
To a bank, to somebody else.
Rehabilitate, right? Refinance, take me out, and it's not going to cost the client a dime.
Yeah.
And, I think that's a benefit to the consumer.
Oh, no, Vince, please.
It drives me crazy what goes on. And I think it's a lack of experience, lack of professionalism. I think people need to reevaluate their responsibility to the consumer.
Oh, by the way, now that you mention that, here's something that everybody should know who's listening to the podcast. In each and every province of this country, there is a regulator for mortgage brokers. In Ontario, it's FSRA. They go by different names in other provinces. But they all have exactly the same theme, exactly the same set of guidelines. And their set of guidelines is that the mortgage broker must find a suitable mortgage for the client, and that all, particularly in the case of private lending, that they would do an exhaustive analysis to make sure that that is the only option to the client. It's got to be suitable. There's got to be, if it's very expensive, you got to make sure there's no other alternatives available. And let's face it, is that happening?
No.
Not enough.
Not enough.
Because, by the way, these provincial regulators, and they all say the same thing, they don't mean just, do your best. They mean you must do this for every client. You must find a way, if humanly possible, to get them their best possible option, the most suitable mortgage. You're required to do it. It's part of your license to be able to do it.
Correct.
So when we say that people are lazy or that they just find it easier or they want a fast answer or something we forgot to touch on, and this is really important to know, folks, if you're a consumer who might be thinking about getting some kind of equity out of your property, really important to know that a lot of these mortgage brokers, regrettably, don't have access to these better deal companies. There's a bunch of mortgage brokers running around who cannot send a mortgage application to a bank. They are not allowed to. They are not accepted by those banks. They have never even bothered to be accepted. Okay. There's a bunch of mortgage brokers who can't even send an application to these alternative lenders because you have to be approved.
Exactly.
You have to be approved by the bank. You've got to be approved by the alternative lender. You've got to go through a application process to say, we believe you're trustable. We want to do business with you. And trustworthy, by the way. I just invented a word, trustable.
Well, listen, I think there's a little bit more vigilance in that area. I think lenders have become a little bit more picky who they want to deal with.
Absolutely. Yeah.
And that's only been the case probably in the last 3-4 years. Mm-hmm. So good on them. I think they want to limit their base of referral sources.
Well, that's fine too. But the bottom line is that some of the more, and this is what really drives me crazy sometimes, is that some of the people who are consistently recommending in all cases private mortgages to solve clients' money problems, they can't even access other lenders. They don't even have a way to go there. They can't, and maybe that is something that our various provincial regulators should address. Okay. Does every mortgage broker have the ability to offer to at least reasonable solutions? They might not have to be approved with every bank. They might not have to be approved with everybody. But I worry that there's a bunch of mortgage brokers running around Ontario who can't do anything but a private mortgage. They don't have enough access to it.
Yeah.
That worries me a bit.
It happens. It's out there. And the reality is what we're seeing more of these days is people going from private to private, which is not good.
Oh, the worst.
Not
the
good.
Worst.
If you're not rehabilitating yourself and moving up the chain of lenders, that's not good. That's not good. You got to really, I sit down with folks and say, listen, it's probably a good idea to sell.
And nobody wants to give up their home.
No.
And particularly when their rents are so high in the province of Ontario. Rent, unless you go to Elliott Lake, I think which is, by the way, that's a very small town. Like, wow, is that small and isolated. If you don't want to go to these very, very isolated, tiny towns, there's not a lot of opportunity to get a lower rent.
There isn't, but I think you have to exhaust all options. And that is bringing other people on title to help you service a debt.
That's back to a bank.
Exactly.
That's getting it back to a bank again. So let's also say with clarity that one of the big benefits of selling your home, and nobody thinks that's a benefit, I know. Nobody who's worked hard to try to stay in their home by getting a private mortgage or by going through a lot of energy and effort to stay in their home, nobody wants to sell their home. But here's the key. Eventually, all the equity will run out. You won't be able to get more lending, and you will have had to sell it anyway. Or worse, somebody will take your house away, sell it for you.
I always tell folks who are in a jam, control your destiny.
Yes.
Right?
Yes.
If you are heading down that path, get ahead of it. Control the sale of your home, because the worst thing is having somebody else sell it and telling you when you got to leave.
Oh, terrible.
And
terrible.
Preserve that equity position for you and your family's sake. And listen, start over.
So when we talk to the people who are listening to the podcast, watching the podcast about this idea of selling your home, it's not because, we would ever want to see somebody sell their home. But what we recognize is if you fall in to exactly what Vince said, that you're running from private to private to private mortgage, taking out more and more equity to try to get by, try to pay the property taxes, try to live, try to keep groceries on the table. If that's the situation you're in, that's not wise, because you're paying way too much interest, way too big fees, and you're just heading down a path of destruction anyway. You're getting all the equity is being eaten up in your property. Yes, you're getting some of it back as cash, but too much of it's being eaten up by interest.
There's 3 levels of privates.
Yeah.
Okay. There's the scorpion, the snake, and the shark.
The shark.
Okay. The shark's the worst, because as you're trying to swim away from it, you could drown. So I always say, what level of private are you dealing with? Mm-hmm. Okay. You better be making sure that private's making sure you could get out of the deal.
Yeah.
Okay. And maybe I'm a little bit too sensitive to that, because I want to truly help people. Okay. I want my money back. I don't want to take over anybody's home. I just want my money back to lend it out again.
Folks, Vince and I have been doing this, as I say, between the two of us, we're cruising on 60 years in the mortgage business. And, you eventually run into so many situations where if you're just even barely a normal human being, you feel that empathy for people. You feel how you look at what's gone wrong in their lives. And sometimes they've made their own mistakes, but God damn it. Sometimes, I was just telling Vince today about a person getting a mortgage where it's fully prepaid, so they weren't making any payments, getting a private first mortgage where the first 6 months of this 1-year mortgage was an okay rate. It was high. It was like 7.5, 7.75. It was high. But the next 6 months was 21%. 21%. That's a fucking ludicrous credit card.
It's ludicrous.
That's a credit card for a $600,000 mortgage. Fucking nuts. Okay. Now everybody likes to jump on it and say, "Oh well, that person made a big mistake. They deserve whatever bad stuff happened to them." No, they don't. They don't deserve it, because there's people out there who could have done a lower rate mortgage. And guess what? We blame people too often. Sometimes we're blaming the victim. Okay. Some people who came in, they got a house. Sometimes they inherited it from their parents. Sometimes they got it 25 years ago. They may not be particularly sophisticated. Some bad things happened in their lives, divorce, things went wrong, and they stayed in that house. And because of the way things worked out in Canada, the house prices went up. In Ontario and British Columbia, the house prices went up a whole hell of a lot. And they were able to do this thing, but they shouldn't have done this thing. Sometimes, don't blame the victim. Blame the enabler.
I'm going to tell you a story.
Yep.
This lady by the name of Ruth called us up. Came in. She drove an Uber. 6 days a week, 15 hours a day.
Jesus.
Okay. She was in her 60s.
Oh.
Dealt with a clown that's on TV, and also moonlights.
Vince is referring to him as a clown because he's known to litigate against people who use his name. That's why.
Okay. Who moonlights doing other business.
Might be jewelry, not sure.
Not sure.
Yeah.
She started off with 1 mortgage, ended up with 3 mortgages from this clown. Jesus, he took both her homes.
Oh, no.
Okay.
No.
And I said, come in with the paperwork. And she was embarrassed. I got to find it, whatever. She comes in like 3 months later with an envelope that hasn't even been opened because she got served.
Oh, my God.
Okay. I'm like, Ruth, I can't help you at this point. I ended up calling the lawyer for this clown and said, like, how do you have a heart to do this to somebody? Like,
by the way, is the lawyer the clown's wife?
No.
Oh, okay.
No.
Just checking.
But it was so bizarre. It was so bizarre. And she lost her house.
2 houses, you said.
2 houses. She
Right,
got
so- yep,
gone.
So, and please, for the people who are in the audience, I know that for so many people, they just stop and say, well, why, my God, how could that even happen? She must have made so many mistakes. Remember what I just said. There's people who are not particularly sophisticated.
Well, they're vulnerable.
They're vulnerable.
And,
They're not sophisticated.
And Ron, I'll say this. People that are, like, you are in the heavy discounting business.
Yeah,
You got savvy shoppers
Very much
that
so.
are trying to save as much as they can.
Bank mortgages at
When
the
you
lowest
deal
rate.
with people that are vulnerable, they're not really keen on sharing their problems from broker to broker.
I get it.
Okay? And they get stuck with one of these 3 snakes, scorpions, or sharks.
Jeez.
And hopefully you got a friendly one that's really trying to help you. And in a lot of cases, these folks fall into this trap.
Like it's like a garter snake. Like it has no
Yeah,
poison
it's
and no
poison.
fangs.
We're just here
and,
to help
okay,
you. Listen,
all
the
right.
rates are high.
Yeah.
That's the way it is. It's the risk, the risk analysis, whatever you want to call it, for that type of deal. And these folks just aren't sophisticated. They get taken advantage of. And that's where I think the due diligence and the suitability,
folks.
full disclosure of
Real
what's
clear
coming,
disclosure.
and
okay.
talk to them and say, okay, listen, if I don't get out of this deal in a year, what's going to happen? I think it's fair to ask.
Look, but the most critical thing is don't blame the victim. I mean, yes, these people made mistakes. The truth is, some of these people's ability to read legal documents is limited. And the worst thing of all is you must have a lawyer. If you're doing a transaction over $50,000, there must be a lawyer who represents you in the mortgage transaction. But, big but, what if that lawyer who's supposed to represent you has been referred to you by the guy who's lending you the money? Here, use this lawyer for your advice. He's the best. Well, I guess there's a relationship there, right? That's a basic conflict, right?
Yeah.
So don't blame the victim. Sure, some people made grievous errors. It can happen, and some people have bad habits. They have problems. They have dependencies. I mean, Vince, I'm sure you and I, over the years, we've had to refinance a couple of people who had a great affection for the casino.
Yep.
Or I even refinanced a guy once who had a great affection for Proline, of all things. I mean, I don't think that even exists anymore. But
Ron, many years ago, I had a lawyer refer me a client, old lady, widower. She needed a mortgage for $300,000 on a house on Maple Leaf and Culford area, bungalow, beautiful bungalow. And it's an Italian old lady, so I spoke Italian. I said, Signora, why do you need this? Why do you need this money? Well, I'm here to help my son. Why? What's like? That's a lot of money. Is he starting
a lot of money? Yeah,
starting a business.
Yeah.
Like, this is 13 years ago.
Yeah. 300, a lot of money.
And she goes, well, he needs it for something. I said, well, how many kids do you have? She goes, 2. I said, well, why don't you and your other kid and your son come in and see me? I want to talk to you. Had them all come in and ask, what do you need the money for? Well, I'm in a bit of trouble. Somebody's looking for money. Blah, 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 blah. They're going to hurt me. Sister's freaking out.
One of the sons is in with the arm breakers.
Well, he's in with a lot of debt. And I said to the lady, and I said, listen, you lend them $300, you just gave him a line for another $300.
Yep.
Because now they know he could pay it.
Yeah. Once you pay,
so
they know
they're going to
you.
continue feeding this clown.
Yeah.
And you're going to lose your house.
Yeah. Terrible.
So I said, put him in a rehab program, and he hides for 90 days. Yeah. And this guy has a family with his own mortgage, and his wife doesn't even know. God. So it's a shit show. So you got to do the right thing. And we didn't help the guy. He probably went somewhere else to find help. But the reality is it wasn't the right thing to do.
And let's face it, Vince, today when this kind of take equity out of your house program is so well publicized and so highly advertised and made to seem like a normal process, that's unfortunate.
It is.
Because you don't want to normalize. You never want to normalize something that should be an emergency. That's for sure. Listen, Vince, the time's flown by. Because we're both like old timers in the business and we both speak each other's language. But I really want to thank you. Vince, Owl Mortgage, thank you for being on the pod. Really appreciate it. And, we're coming back. Look, if you guys have questions out there, put the comments on YouTube, and we're going to address some questions in the next pod. Thanks very much.
I appreciate it, Ron.
Take care.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.